morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, February the 18th. Well, mixed trade overnight has turned mostly higher here this morning. Corn prices right now are 1 to 2 better. Same with the soybeans. Wheat is still down about 2 to 5 cents, giving back a portion of Friday's strong gains. Meal prices are up about $1, while oil prices are steady. Russian and U.S. diplomats are meeting this week in Saudi Arabia to discuss a plan to end the war with Ukraine. Noticeably absent from these talks, however, is Ukraine. Ukraine has stressed it is unlikely that any meaningful peace agreement can be reached unless they are at the negotiating table. Weather conditions in Argentina continue to improve. We had some weekend rains across much of the central and northern growing regions. Rain across the north is expected to extend through today. Conditions across the south, however, are drier, remain in a drier than normal pattern, as areas of southern Buenos Aires and La Pampa still have not seen much beneficial rains and are not expected to until the end of this week. Conditions in Brazil, they're mixed. Some rains will impact the southern portions of the center-south region, along with northern Mato Grosso this week. East central and northeast growing regions will remain in a dry pattern really right through the end of the month and into the early parts of March. Central and west central growing areas will see some light to moderate precipitation, which should enable field work to move along at a normal pace. However, the slow start has kept the progress slower than normal to date. Ag Ruel, they report bean harvest has reached only 23%. This as of last Thursday versus year-ago pace of 32%. The second corn plantings, they're at 36%, up from 20% last week, however, well below the 59% at this point a year ago. Activity from the speculative traders was mixed in the week ended last Tuesday, February 11th. On Friday, the CFTC reported money managers, they were net sellers across the ag space for the first time in 7 weeks, while the index funds were net buyers for the 7th consecutive week. Money managers were sellers in corn, soybeans, and soybean meal, while buyers in the bean oil and in all 3 classes of wheat. The money manager's short position across the wheat complex, that fell about 18,000 contracts last week to 124,000. It's still the smallest short position in 3 months. NOPA Crush later this morning at 11 o'clock is expected to show NOPA members processed nearly 205 million bushels last month. Well, that would be down from the all-time record of 206.6 in December. It'd still be the second highest monthly figure on record. Oil stocks are expected to rise slightly to 1.3 billion pounds. Corn just continues, rallies here continue to be capped just below the $5 level for the spot March contract. Pullbacks, however, have been quite modest. I expect prices to eventually challenge the high from last May at 508 as demand remains robust. March beans, they just continue to bounce off its 100-day moving average support, which today is at 1022.5. I do expect this to eventually be breached with a likely challenge of the $10 level, simply just under the weight of the South American harvest. Inside trade for both products overnight. Oil continues to consolidate very close to that 46-cent level. And March beans, they did back off back below this $6 level here in the March Chicago contract. That after reaching a 4-month high on Friday. KC and Minneapolis have also pulled back. Extreme cold across much of the nation's midsection is expected to last through the end of this week, keeping some support below the market. Snow coverage is mixed. Temperatures are expected to rebound here beginning this weekend, rising to above normal readings by late in the weekend and early part of next week. Thank you for listening, everyone, and I hope you have a great Tuesday.